Let's start by looking at the eligibility requirements to participate in the DC retirement plan. Members must be at least 18 years old. They need to work at least 20 hours per week for at least 20 weeks each year. The position must be regularly funded, not temporary or of limited duration. If someone had a previous active or suspended IndyPERS enrollment and didn't take a refund, they may be grandfathered into their prior plan when they return to employment. Please note that the DC plans do not apply to judges, public safety, National Guard, BCI, or Highway Patrol personnel. Enrollment is completed through the member self-service. Certain employees may elect to participate in the DC 2025 Tier 3. This applies to individuals first enrolled on or after January 1st of 2025 who are at least 18 or are either temporary or regularly funded or working fewer than 20 hours per week and less than 20 weeks each year. Participation is voluntary for these employees. If they choose to participate, they must make the election within 6 months of being hired. Participation is fully employee funded with contributions made after tax. Temporary or employees under 20 hours a week and less than 20 weeks a year cannot participate in a 457 or a 403B plan as well. Here we'll compare all three DC tiers. Tier 1 includes those enrolled before January 1st of 2020. Vesting occurs gradually, 50% after 2 years, 75% after 3 years, 100% after 4 years. Alternately, vesting occurs automatically at age 65 while employed. Tier 1 includes the retiree health insurance credit, and the RHIC is a monthly retirement benefit that reimburses eligible retirees for the following after-tax insurance premiums: health insurance, including Medicare Part B and supplemental plans, prescription drug plans with Medicare Part D, long-term care insurance premiums, and dental and vision. Retirees can earn $5 per year of eligible service credit. This amount is reduced if you do retire before age 65 and do not meet the rule. Now, on to Tier 2. Tier 2 covers members enrolled from January 1st of 2020 to December 31st of 2024. The vesting schedule is the same as Tier 1, but there is no health insurance credit. Tier 3, effective January 1st of 2025, introduces a new structure. Employees contribute 4%. The employer contributes 5.26% for a total of 9.26%. Employees may also contribute up to an additional 3%, which the employer will match. This brings the total contributions to 15.26%, similar to how tiers 1 and 2 work. There is no retiree health insurance credit. A defined contribution plan gives you control over your retirement savings. You're responsible for managing your financial future. Empower allows you to design a portfolio that aligns with your goals and risk tolerance. If you prefer to manage your investments, you may select your own funds. If you prefer a hands-off approach, Empower offers life cycle funds that automatically adjust as you near retirement. Your account is portable and you can roll in other eligible retirement funds to your DC plan. Remember, this is a 401A plan. Withdrawals after age 59 and a half are penalty-free if you've been off payroll for at least 31 days. When you leave employment, you have three options. You have the ability to retire, refund or rollover, and defer your account. When it comes to retirement, you would apply with IndyPERS and Empower. When it comes to the refund, you deal with Empower. And then when it comes to deferring your account, that typically happens when you basically have a less than $1,000. You want to basically save that funds. That's an option you can do. Anything over $1,000, you have to go out of your way to basically refund the account. To go in a little bit more detail, to defer your account, if you want to leave your funds with Empower, submit the application for Deferred Retirement Benefits SFN 59044 to IndyPERS. This form can be found on the DC Retirement Form Packet on the IndyPERS website. When it comes to small distributions, if your account balance is $1,000 or less, when you separate from employment, IndyPERS will direct Empower to distribute your funds and close your account about 120 days after your last day of work, unless you elect to defer your benefit. Your balance will be checked before your distribution, so if it exceeds $1,000, it will not be automatically distributed. If you return to work, your account will not be distributed. Now, if your balance is over $1,000 and you choose to refund or roll it over, to start the process, you need to go to empowermyretirement.com or call 1-800-701-8255 to start the process with Empower. Upon retirement, your vested account balance is paid in monthly, quarterly, semi-annually, or at least annual installments until the balance is depleted. You may take an in-service distribution at age 59.5 if still employed by an IndyPERS participating DC agency and no longer required to participate in the DC plan. DC Tier 1 only retirees. Here's the thing, remember gang, if you retire before age 55, the RHIC is not available at that time. If you reach age 55 and continue taking at least an annual distribution, you are then allowed to start utilizing the RHIC. When you're hired, you're required to assign beneficiaries. And so to help us and help your heirs out if something bad would happen to you, please make sure that you complete the SFN 2560, the designation of beneficiary for group retirement plans. It definitely helps all of us in this situation. Here is an overview of the 2025 Defined Contribution DC Tier 3 plan. Employees are required to contribute 4%, and the employer contributes 5.26%. Yes, we're going to be mentioning this multiple times. We want to make sure that everyone is clear on this with the Tier 3 plan. You may choose to contribute up to an additional 3%, which will be matched by the state of North Dakota under the Tier 3 DC plan. Remember, this is only for the Tier 3. Tier 1, Tier 2 don't do this. We also can receive matching contributions through an eligible state of North Dakota 457 plan. And we'll go into a little bit more detail in the next slide. Now, again, we're going to go over the employer match and the optional permanent employee contribution in more detail. Every Tier 3 member contributes that 4% and that 5.26% from the employer. You may elect to contribute up to an additional 3% within your first 30 days of employment. The IRS rules allow only this 30-day window to elect up to 3% in the defined contribution plan. If you miss this period, you will not have another opportunity to receive the matching contributions. If you make this choice in the DC plan, it can't be changed. Whatever you pick, 0, 1, 2, or 3%, your employer will match it. This election remains in effect even if you change employers and leave and return at a later date with an IndyPERS employer. If you do not make the DC election with a 30-day window, you may still contribute to a 457 plan at any time. Your employer will match up to 3% as well. However, only 3% total can be matched across both the DC plan and the 457 if the employer has the IndyPERS 457 plan. For this reason, it's crucial for employers to report new employees to the IndyPERS immediately. Missing the window results in the loss of the DC match. To go a little bit more detail on that, the key features of the DC 2025 match is that the election is irrevocable. Once an employee elects this match, it remains in place for the entire career of the member. If they move to another employer that participates in the IndyPERS defined contribution plan, that employer must continue the match. This creates strong portability for employees who anticipate staying within the participating employers. However, employees should keep IRS annual contribution limits in mind, as these may impact higher income earners. And we're going to have another presentation later this month that will kind of go into that. The 457 match, well, the 457 match is designed for flexibility. Employees can start, stop, raise, or lower contributions at any time during the year, which can help them adjust changes in income or financial needs. Unlike the DC match, portability depends on whether a future employer also offers the IndyPERS 457 plan. At this time, we offer Nationwide, Bravera, of course, Empower, and then the Bank of North Dakota, which is actually more of a pre-tax savings account, to be honest. If they do not, the employee retains their existing funds, but the employer match ends. High-income employees may also need to consider applicable IRS wages or contribution limits here as well. The common feature, the money always belongs to the employee, regardless of which match they choose. Employees maintain full control over their investment selections and strategy in either plan. When selecting between the DC 2025 match and the 457 match, employees may want to evaluate whether portability or flexibility is more important to them, how stable or predictable they expect their future employment to be, how contribution or wage limits may apply to their income, their comfort level with long-term versus adjustable commitment. Employees can split contributions between the DC plan and the 457 plan, as I've said in the previous slide. For example, you may elect 1% in the DC plan within your first 30 days, and then later contribute an additional 2% to the 457 plan. Your employer will match based on where you contribute. If your election is with the 457, the match is deposited in your employee 457 account. If you choose the DC plan, the match is deposited into the Empower account at Empower and the transfer to your account as you vest. Please note that the DC match is irrevocable for regularly funded permanent employees. It cannot be changed, and even if you leave employment and return at a later date with the IndyPERS employer, you will still be at that same matching. To make the elections, we're going to go over that now with the next several slides. And right now, this is where you would go to make the voluntary elections through the member self-service. Your DC Tier 3 match election within the first 30 days is here. Opening a 457 account, adjusting 457 contributions at any time, and enrolling in IndyPERS insurance plans if eligible. This happens all here. This is your central hub, and member self-service serves that for your IndyPERS activities. And when it comes to basically enrolling with your online Empower account, which you really need to do, go to empowermyretirement.com to get on there. Now, to get the initial stage, you would basically come to the screen once you're on there. You're going to click on the register button, choose I do not have a PIN tab, and follow the prompts to create your username and password. And again, remember, Empower My Retirement. Empower has several tools to plan and review your retirement benefits besides what you see listed on this screen. They also provide online tutorials to better assist you with utilizing the actual website and your retirement benefits that you can plan on there. Some of these resources include Budget Planner, the cash flow tool, and other options listed here, all designed to help you build your retirement savings and achieve your long-term goals. Empower offers multiple forms of support. Customer Care Center can assist with questions about fees, investment options, platform navigation. You also have access to dedicated Empower retirement counselor Mike Williams, who holds one-on-one sessions each month. Spots are limited, but he is an excellent resource for more in-depth planning questions. Empower's workplace planning and advice line also provides personalized guidance to support informed decisions at key points in your career. And just a disclaimer, Mike did not pay me to say those nice reviews about him. The key message as follows: the future belongs to those who are prepared by staying informed about your benefits, utilizing available tools. You position yourself for long-term financial success. Taking small steps today can make a significant difference in the future. If you have questions, contact IndyPERS. Our customer service team is available by phone. You can call either the 701-328-3900 or the toll-free number 1-800-803-7377. I need to practice more on that. We're here to support you in every way. Please give us a call sometime.